You are welcome to the fourth episode of our Trade and Development webinar series. We plan to have conversations, very insightful conversations through this webinar. So today our topic is leveraging technology for trade in Africa. You would agree with me that trade is integral to Africa's ability to achieve its objective of economic integration and sustainable development. In doing this, technology plays an important role, and individuals and businesses across the continent need to be up to date on the current technologies that can enhance trade activities and commerce. Today, we'll be having three amazing speakers. I have Abayomi Odewale. Abayomi Odewale is a lecturer at Kaduna State Polytechnic and a fellow at the Mira Initiative organization here. As a socio-political and economic analyst, he's been published on Vanguard, Business Day, Daily Trust, and many more media platforms. Also, just recently, he was on AIT just a few days ago to talk about something related to the topic of conversation today. I also have Evans Edebo. Evans is the Executive Director of PABL Solutions, a trade support organization on a mission to building the largest consortium of intra-African trade support specialists. He's a Mandela Washington Fellow reader, a business development professional, a financial management expert, and many more. Evans' AFCFTA implementation commitments through the last 3 years have directly impacted over 20,000 professionals, women, youth, and MSMEs across 46 African countries. Currently, he serves as Additional Director General for Africa at the Global Council for the Promotion of International Trade. You're very much welcome, Mr. Evans and Mr. Abayomi Odewale. So we'll move straight into the conversation while we await our third speaker. By the way, I could just quickly read the profile of our third speaker. Our third speaker is Benjamin Arunda. Benjamin is one of Africa's leading experts and consultants on blockchain and emerging technologies with over 5 years of experience consulting for companies, government agencies, multinationals, NGO, and startups. He is the Director of Public Policy and Government Affairs for Sub-Saharan Africa at Moharam and Partners, Egypt, and the chairman of the Africa Blockchain Council. He's a member of the Blockchain Association of Kenya. He's also the founder of Chain Advice, a blockchain advisory firm based in Nairobi with clients in Asia, the Middle East, and Africa. So thank you very much once again for joining this webinar today. As I said earlier, our topic of conversation today is leveraging technology for trade in Africa. And as I mentioned in my opening remarks, that trade is very integral to Africa's objective of achieving economic integration and, of course, prosperity by extension. So I would like to start very fast. My first question is to Mr. Evans, and it is that how can trade help the continent of Africa achieve integration and sustainable development? Especially in view of the Agenda 2063. We already know that the Agenda 2063 is a beautiful agenda, with many lofty goals, but how can trade help the continent achieve this integration? Mr. Evans.
All right, thank you very much for having me on this call, and thank you so much also for what you do. The field of international economy, it comprises two fields. We have trade, international trade, then we'll have payment, international finance. Now, talking about the role of trade, number one, trade helps to create a market. It brings, like for instance, in Africa, where you have a market that is so fragmented. So trade can actually serve as an instrument, to foster diplomacy, to bring about integration, to bring about economic cooperation, especially in terms of then to bring about a closer relationship between how countries interact. At the end of the day, no country is self-sufficient. At the end of the day, every country is blessed with, is endowed with unique resources. So in order to foster an economic growth, in order to foster industrialization, in order to create opportunity for value addition, in order to spur economic growth and development,
So I got the point you mentioned about the fact that no country is self-sufficient and we have to trade with one another. What the country A produces can sell to country B, while country B produces excess of something, and then they send to another country, country A in this case. So I would like to have Mr. Abayomi's views on this same question. How can trade help Africa achieve economic integration even in the face of the Agenda 2063, which we all know is a very lofty agenda?
Good morning, everyone. My name is Odewale Abayomi. As regards the African Union Agenda 2063, the idea is to accelerate growth across the continent. And in doing that, trade is very essential, is very crucial to development of Africa. And in order to achieve that, okay, trade will boost the wealth of the country in the sense that also it will create jobs across Africa, and it will attract investors to Africa, and that will lead to prosperity for Africa. And I want to make a point that before the advent of the colonialists, Africa has been in a form of a single market, in the sense that before they came, there was no borders, and also the means of payment then was a cowrie. People from West Africa, they trade across Sahara with people in North Africa without any border restriction, and then ease of payment and all that. Not until we had the colonialists creating borders and then currencies within different regions. So this will drive that prosperity, because currently most African countries, when we look at the indices, we are not performing quite well. Talk of employment, happiness, freedom, and I want to focus specifically on trade. Trade, the way the world is structured is that a country cannot exist in isolation. You have to trade, and in doing that, that will expand the market. And also, when we are talking about world powers, I believe that by 2063, if we are able to achieve that sustainable development through trade, Africa will be calling the shots in the community of countries and continents. When they want to classify world powers are classified based on two things. They must have maybe political powers or economic power. So that development, that trade, we make Africa to be part of the world powers, because economic-wise, will be respected in the community of nations.
We have already considered, the importance of trade and how it can help the continent achieve economic integration in the context of the Agenda 2063. So now I want us to move into the crux of the conversation. We are looking at technology and how it can be leveraged for trade across the continent. You would agree with me that technology is the backbone of digital innovation. So how exactly do you think digital technology facilitates trade? So I would just like to start with you again, Abayomi, then I get Mr. Evans' thoughts on this same question.
Yes, digital technology in terms of trade. The world is developing and evolving, and when it comes to trade, digital technology as a platform for payment is quite essential, in the sense that when transacting between two maybe manufacturers, maybe across borders, the time of processing also play important role in expanding the market. In a situation whereby the money is processed and it takes about maybe a week or 2 weeks, the other end, the manufacturer at the other hand couldn't proceed with other materials for expansion of the market, among others. So with the advent of technology in boosting payment system to facilitate trade across borders, that will ease the friction and the quick processing of and the clearance of money across borders. And one of those technologies that we currently have is a Pan-African payment and settlement system, which was initiated, by the African Union with the support of African Bank and the Committee of Central Banks in Africa. Before now, when it comes to payments, processing and clearance across border in Africa, it normally takes weeks, and then you have to convert your money to other currencies, third currency, mostly hard currencies like euro or dollars. So with this Pan-African payment and settlement system, you are able to pay in your local currencies. It will be delivered instantly, and then there won't be any long duration of weeks and days before the payment is being settled and cleared. And then it is the pressure on the African currencies and all that. So
thank you. So we'll look deeply at PABs as we go on in the webinar. I'd like to have Mr. Evans talk on how technology plays a role in facilitating trade, digital trade. Today we are talking about the internet, mobile money, financial technologies, the blockchain, logistics, supply chain. So all of these things have technology as their backbone. So how do you think that digital technology can facilitate trade today?
Having established that trade has to do with your goods and circulation, exchange of, and then even exchange of pay. I went further to say that usually, for this exchange to take place, there should be a process or a structure or a model is established for this exchange, to happen, to take. But then, whatever model, structure, or process that has been created, technology comes in as an enabler. So, an enabler, helping you to be more effective, efficient, helping you to save time, helping you to save money and resources, and all of that. So, now to be more specific, the role of trade, the role of digital technology in trade development is, number one, it brings about connectivity. It helps all the players in the entire value chain. Technology helps to connect the player, irrespective of their geolocation, it brings about that connectivity. And then number two, it gives visibility to these players in the entire value chain. Now, it doesn't matter whether you are a regulator or a policy maker, to the regulator, manufacturers to wholesalers to retailers, and then to the end users and many other players in this value chain. Technology, it helps to bring about visibility, beyond connectivity. Three, technology, through the aid of technology, we are able to create a database. We're able to profile how many regulators, how many institutions, how many private sectors do we have in this particular segment? Right. So it helps to profile and create a database. Even the trade information service, even the transactions that is taking place. So you're actually able to look at the historical transaction detail of a particular product, for instance, or a particular service, for instance, or the market, or even the policy that created that market. So everything become very transparent, everything become very visible. You are able to manage your expectation once you decide to scale into a particular market. So that's another role that technology plays by helping a database. Then away from a database, another role that the technology play is to allow a seamless transaction, allow a seamless multiple communication operations across terminals, across thousands and millions of terminals of devices at the same time. So it is, okay, let's look at it like this. For a transaction to happen within the confines of trade or in a market, there are a series of processes or there are a series of activities that needs to happen. It's just like your football, you're playing football. So there are many players. So in that process, in transaction process, there are many players there. So technologies help to connect all of these players and ensure a seamless communication, real time and online, okay, among these players in order to have an effective a transaction, okay, at the end of the day, for us to be able to achieve what we set to achieve. And then finally, we'll talk about digital currency, so which is basically what we believe in terms of financial inclusion that is going to be able to drive it much more deeper, looking at many people that have access to phone, to internet, and all of that. So all of these are the roles which digital technology can actually play to enhance, okay, and the prospect of trade development anywhere, including in Africa.
Thank you very much for that insightful comments and explanation. Talking about seamless payments, we've talked a lot about payments and how it's very integral to trade across the continent. It has to be easy for someone in Zimbabwe, for example, to pay someone in Ghana or Egypt, and that's like how we can really enhance intra-African trade. But I would like Mr. Abayomi to talk a bit more on this seamless payment, especially with regard to the Pan-African payments and settlement system. That is a system that was initiated last year, I think, as a collaboration between the Afrexim Bank and the African Union. So I would like you to let us understand how PAPs can help us to achieve efficient and functioning payment system, because that's really important to intra-African trade, where we have Africa, where we have about 42 legal currencies. How do we exchange these currencies for one another? Mr. Abayomi.
Yes. As regards a Pan-African payment and settlement system, we all know that when it comes to trade, after trading, then there needs to be a reward for trade. Or services that should be in form of payment, monetary payment, and we are talking about intra-African trade cutting across continents. So when it comes to transacting across borders, there is this issue of differences in currencies and the discussion on settlement, mode of settlement. But over the years in Africa, there has not been any coordinated approach of settlement of payments across the continent. So the payments have been settled and processed by the Committee of Central Banks of about 5 of them of developed countries, known as SWIFT. So they process this, they recognize hard currencies like euro or dollar. So which means for someone in Africa to pay to in maybe like Ghana, to pay to someone in Egypt, you have to convert your currency to either of the hard currencies, and then for them to recognize and process it, and then to be delivered to the recipient. And this normally take time, weeks, even for clearance, and for the fact that there are charges. So all this will add to the cost of productions and selling in the process. So with the advent of PAPs, the idea is to coordinate the existing payment system in Africa. So some countries already have their payment and settlement system, regional payments already. There are some regions that have that system in place already, some banks as well, and then some fintechs. So the idea is to connect them to that system so that the monies can be traceable and be efficient. You transact in your local currency, and then the recipient will get in the local currency, and quite fast. So it is Pan-African payment system that eliminates the orders of sourcing for forex, and that nightmare of trying to get forex has been experienced in most African countries. And also, they've been trying to partner with other regional payment systems, even outside, beyond Africa, in the sense that one will be able to pay to those regions in local currency. For instance, there is this Bona, that's the payment system in Arab region, all these Saudi Arabia, Kuwait, Dubai. I mean, around within that region, they already have that regional payment system and even international payment. So perhaps signed an agreement with them last year, a memorandum of understanding. So which means that because the Bona enables them, people in Arab region, to pay in their local currency, and then the recipient will get in local currency. Now, joining that with PAPS, it means someone in Africa, maybe South Africa, can pay in the local currency in South Africa to someone in Saudi Arabia, and then the person will receive it in local currency there. For instance, there was something remarkable happened last month in the African banking system. Ethiopia line is operational in Nigeria, while Dangote Cement is operational in Ethiopia. Ethiopia Central Bank is facing forex shortages, just like Nigeria is currently facing forex shortages. So the money of Ethiopia Airlines is trapped in Nigeria. For people who have been following aviation, the trends in aviation sector, and also Dangote Cement couldn't repatriate the money realized from sales in Ethiopia. So what they did was that the Central Bank of Nigeria and that of Ethiopia, they signed a memorandum of understanding to swap the payments because of the difficulty in having forex. That the money of Ethiopia Airlines in Nigeria will be used to settle Dangote Cement, while that of Ethiopia Airlines in Dangote Cement in Ethiopia will be used to settle Dangote Cement. That was how they settled it. So with the PAP system, that will eliminate that. And also for air flight flight carriers like Dubai and Emirates in Arab region, it means with that memorandum of understanding with Bona, perhaps with Bona, it means possibly they could pay in local currencies and settle the payment for with the Arab region dominated. Those that are domiciled in that region, like Arab Emirates lines. So these are some of the benefits. So by the time other countries integrate, currently about 9 countries in Africa are already into the system. So there is a need for urgency for other remaining countries to integrate into the system, and also other microfinance finance banks and fintechs, so as to accelerate that. Then that would be one aspect of to achieving that AFCTA, because there are some other issues as well. Okay. But that's how we can settle our payment systems across border quite easily.
Yeah, thank you, Mr. Barman, for that very insightful and educative comments. Of course, we need to integrate, and payments, having payment system like PAPS that can enhance and make payments seamless across the continent is very, very imperative. So, I think of this as more like a step before us realizing a Pan-African currency. I think that's a lofty idea, but that's not the conversation for today. Yes, so I will talk a lot about payments, but let's look a bit away from payments. There is the digital trade framework of the African Continental Free Trade Area, AfCFTA, and it basically aims to streamline custom procedures, foster e-commerce, and enhance connectivity among African countries. So what hopes do you have of these noble initiatives? Aside payments, now we can talk about the e-commerce, we can talk about having documentation processes that are similar. And if someone is shipping goods from, say, Kenya to Cameroon, you don't have to encounter different custom procedures along the way at every border. So, I mean, what do you think, Mr. Evans? I'll start with Mr. Evans this time. What do you, what are your hopes for this digital trade framework of the AFCFTA?
All right. Thank you very much. Yes, looking at AFCFTA as an intra-African trade policy and looking at of which digital protocol on digital trade happens to be one of the protocol, okay, in this policy that created the market, the African Continental Free Trade Area. If you look at one of the core principle, okay, of that underlined the negotiation of this AFCFTA agreement talks about um, disclosure of information, talk about transparency, okay, and disclosure of information. And that's one area where this digital trade, this protocol on digital trade comes in, is basically relying on that heavily. Relying on that heavily. Now, for trade to happen, there has to be transparency. Not to forget that there are this market is state parties that comprise this market, which as at date is over 46 African countries. So these are state parties that comprise this market. Though everybody, what is at stake is the market. Everybody want to have a significant market share. Each of the state party want to dominate, have a very significant market share. But then the protocol on digital trade is saying that, fine, let's clearly define how these transactions, especially when it comes to technology, okay, would happen, would be managed. Okay, let's say, for instance, when you are signing up on maybe Gmail or Facebook or any of these big tech, okay, platform, not many of us are even careful to even read the agreements. They just tell you, do you agree? You just click, yes, I agree. In fact, in most form that we fill online, do you agree or disagree? You just click here. Not many of us are having the time. But okay, so when it comes to digital trade, is different from manual trade. It's different from trade that is being executed manually. You may not even see the person you're dealing with that is at the end of that terminal. You may not even see the person. You may not even know about the organization, who owns the organization, and whatever. So, the protocol will start at the minimum requirement for all of this to happen, so that to create a kind of a level playing ground, so we're able to manage expectations. There are do's and don'ts. There are pros and okay, what you should do, what you should not do, and all of that. Because at the end of the day, something of value, whether in form of product, in form of service, or money, is involved. Asset is involved, and it has to do with transfer of ownership. It has to do with, okay, value is being exchanged. So everybody want to be careful. Everybody want to ensure that whoever you're dealing with is a legitimate. There's legitimacy in this whole thing. So this protocol is going to bring all of that to bear and ensure that it is clearly stated, and then all the state parties and private sector, the players, the end users, and everybody, you know exactly. Okay, everything is disclosed.
Thank you, Mr. Evans. I mean, talking about the digital trade initiative, I mean, moving a little bit more into it, I would like to have Mr. Abayomi now. You know, talking about the issues of trust, of course, with anything that has to do with digital technology, digital communication, you have to, and sometimes you are concerned about, just as Mr. Evans raised earlier, that you want to be sure that you're communicating with the right channels regarding especially payments. So how do you think this can be navigated, Mr. Abayomi?
When it comes to payments, when it comes to payments across, between two parties, there needs to be a level of trust for payments to be made. And when it comes to online transactions, for me, I think one way in which one can navigate around this is by checking the reviews of the company or the person involved, the businesses. At least that person should have online presence. So by reading through that, one could see some reviews about that person that could give a clue. And then they've been in existence since when? They've been operating since when? Right? So putting all this together will give a sense of, having that decision on whether to proceed with that transaction or not with the person. And also, there needs to be a kind of secured system for payments. Like some people, they need to be aware, curious of being duped. They need to pay attention to the mode of payment. Maybe the link is suspicious. So there are some links, if you see them, you know that this is quite suspicious. And most payments, when it comes to online, needs to be secured in terms of that security. And also, payments should not be accessed through VPN, because they can hack into the payment and hack the data through that. So there are some precautionary measures that one should take in the process. So, and one should have a kind of a payment system that is reliable. Just like I stated earlier, for instance, like PAPS, like I said, the payment can be traced, and then the person you are transacting with, they have the details. It's just like the regular bank at both ends. So it can be traced through the system, and fraud can be eliminated and minimized in the process.
Yeah. All right. That underscores the importance of digital literacy. I think in Nigeria now, the new Minister of Communication, Innovation, and Digital Economy is really big on digital literacy, because when you are digitally literate, you are able to see suspicious things. For example, when a link is sent to you, you can easily look at the link and figure that, oh, something's wrong with this link. So digital literacy is very, very important, and it's one thing that a lot of governments and even non-government organizations across the continent have to invest in for us to have the digital economy in Africa. So as we move close to the end of the conversation, I want to ask you, my speakers, to just briefly talk about, to someone who is watching this webinar now and doesn't know much about trade, intra-African trade, payments, e-commerce. How they can leverage technology for the business that they are doing in any African country where they are residents. I'd like to start with Mr. Evans, just like 2 minutes each, because after your submissions, we should have questions and contributions from the other participants in the webinar.
All right, thank you very much. For a trade to happen, there has to be a market. Okay, market is created. You create a market through policy. So we have a policy or an intra-African trade policy, a legal instrument or a framework, whatever you want to call it, that created a market. And the name of that intra-African trade policy is called the African Continental Free Trade Agreement. So that is a policy that created a market, and that market is called the African Continental Free Trade Area. Is a market that connects 1.4 billion African consumers. Okay, and currently the market is valued in terms of the aggregate GDP. These 1.4 African consumers at 3.4 trillion US dollars, about 2019 valuation. If we're to do the current valuation, it should be more than that. So that's basically what AFCFTA is. And in terms of technology, there are what we call operational instruments. Okay, operational instrument. Okay, that helps in the implementation of this African Continental Free Trade Area. And I think for those that are technology savvy, okay, you want to know the role of technology and how you can be part of it or where to get started in terms of technology, there are a lot of these technology operational instruments, and of which many of them applications, their technologies, solutions and platform which you can actually leverage on and see where you can hack on opportunities that you can actually convert to concrete transactions. So I don't know if that sounds makes any meaning.
Oh, all right, great. We can have Mr. Baomi's thoughts on the same question.
Okay. Thank you very much. Currently, within Nigeria, for instance, many people have been leveraging on like social media, placing their services on social media. Some Jumia, partnering with Jumia and all that to put their market there. So currently, there are some reliable platform, but I wouldn't want to mention names, that one can create a shopping, like a market there. Your goods and services can be there so that others can have access to it, browse through it, they can have the price, and then they can order, and then the payment will be facilitated, and then you can get paid through that platform. There are some people are creating that platform, some fintech companies, and also one can leverage on social media like your status, your Facebook, in order to transcend beyond your immediate environment across borders. And also one can create a website and in order to scale the visibility of the market across borders, and coupled with that with efficient payment system. So, and also if you write, you can put your books on maybe Amazon. There are some online platform, marketplace that one can leverage.
I think there's a
business. Yes.
All right, great. Thank you for that. As we move towards the end, I would like to have your view on the future of trade on the continent. Like there's a lot of expectations, especially with the AFCFTA, on what trade will look like on the continent. If you saw a video by, I think, the foreign minister of Kenya recently, where he talked about Kenya opening up the country, that people should come into Kenya, come and trade, come and make money in Kenya, and they hope that other African countries will reciprocate that. So I mean that was beautiful to watch. But what's your hope for trade and prosperity on the continent, Mr. Abayomi? Just a minute, and then I have Mr. Evans.
Okay. If AFCFTA is fully implemented, operational, by focusing on the other elements of it, freeing our borders, efficient payment system, which is already gathering momentum, single African air transport system, because to access some African countries now, you have to move to Europe before you can connect to those countries. So we need to address all this. But by the time we address all these elements, AFCFTA is has a potential valuation of about $2 trillion. And also by 2035, Africa can generate about that's $450 billion from my research.
Thank you.
So
we can generate a lot of money, we can create a lot of jobs, and by so doing,
create jobs, expand the markets.
Mr. Evans, just a minute from you before we have questions and contributions from other participants.
Thank you very much. I would say the future of trade in Africa is very bright, in the sense that, number one, we've been able to have a policy in place that's created market, and also the market that it has created. And then we're trying to put infrastructures in place. Then we have the product. So yes, we still have gaps in terms of value addition. That's because we need the factories, we need the industries. We need to industrialize to start adding value to our product. Also, we still need funding to mobilize, to develop a road network and other enablers. But then I must say that we are now in the right direction, having succeeded in creating a framework, a policy that now created a market for us. Thank you very much.
Thank you. I'd like that we are now, on the right path. We are facing the right direction, and hopefully we can do a lot of great things with this continental agreement. So thank you very much, everyone, for taking our time to join us on this webinar. We've had, a very insightful conversation on the African Continental Free Trade Area, the Digital Trade Initiative of the AFCFTA, and how we can generally leverage technology for trade on the continent. I hope that we can all become better proponents and better advocates of intra-African trade, because the benefits are there. It leads to greater markets, continental markets, greater jobs for especially young people, and greater opportunities, more prosperity for all across the continent. As you know, that this continent is the most impoverished continent in the world, and a lot of things have to be done. All hands must be on deck to push the continent forward. And that's the reason why we're doing the bits of work that we do here at the Mineral Initiative for Economic Advancement, as a head for economic advancement. So once again, we extend our special gratitude to the Initiative for African Trade and Prosperity for supporting us to organize this webinar. Thank you, everyone, once again. Until the next webinar, which will come up around this time next month. See you again. You will receive links to register for the next webinar. Thank you, everyone, and have a nice day.